There are enough buyers for U.S. stocks to keep share prices near record highs, but demand's dwindling in the real economy. Output from U.S. factories is down this month for the first time in a decade. And U.S. officials seem unsure what to do about it. President Donald Trump's been flip-flopping on tax breaks all week.
Payroll tax is something that we think about.
I'm not looking at a tax cut now. We don't need it.
On Friday, his top economic advisor tried to clear the air, but he's not ruling out the need for government stimulus to boost the economy.
What the president's trying to say is there's no near-term tax cuts for stimulus or fighting recession. We don't have that point of view. We think the economy's in sound shape. We're staying with our program on lower tax rates, deregulation, energy opening, and lowering trade barriers.
Analysts say consumers aren't as optimistic, and the negative sentiments could spill over to the rest of the economy.
If consumer confidence starts to falter, if business investment starts to falter because of reduced confidence in tomorrow, then you start to see all the negative chain reaction that leads to lower activity.
U.S. Federal Reserve Chairman Jerome Powell says policymakers have plenty of options available to tackle any slowdown, but he stopped short of announcing immediate cuts to interest rates.
We will act as appropriate to sustain the expansion.
Some economists say if the U.S.-China trade war drags on, it could deal yet another blow to growth.
If we start to see the application of tariffs on consumer goods, which is currently under threat as of September 1st and December 15th, then the risk to the main pillar of the U.S. economy becomes quite a bit larger. And in that environment, you could start to see the telltale signs of a much sharper slowdown in economic activity.
On Friday, Beijing slapped tariffs on U.S. goods worth $75 billion, further escalating the ongoing trade war with Washington. As this standoff continues, it could worsen the slump in the world's largest economy. Mobin Nasir, TRT World.
And Mobin joins me here in the studio for more on this now. Mobin, China, as we heard, has fired back in this ongoing US-China trade war. What do we know about this latest escalation?
Well, we do know that China had threatened to fire back at the latest U.S. tariffs on its exports worth about $300 billion. Now, the latest tariffs announced by China range between 5 and 10%. They're being applied on U.S. exports worth about $75 billion. And these are all products ranging from agricultural produce like soybeans. Remember, soybean farmers have perhaps been one of the worst hit in this ongoing trade war, and it seems like they're on target again. There are also consumer electronics, small aircraft, and China is reinstating 25% tariffs on U.S. autos, so really hitting U.S. consumers.
Yes, now in his immediate response, Donald Trump tweeted, "Who's a bigger enemy of the US, Jerome Powell or the Chinese President Xi Jinping?" He really is stepping up the pressure on the US Fed chair, isn't he?
There really seems to be no love lost here, right? He said Powell lacks vision, that he is hurting the economy, and of course he's trumped all of that by almost labeling him an enemy of the US economy. Look, the US president seems to be saying all the wrong things, and perhaps in some ways these could damage the US economy more than any trade war with China. The US dollar and its strength fundamentally rely on the freedom of business and the independence of the Federal Reserve. Challenging those two really cannot bode well for the US economy, for US assets. And of course, it puts the Federal Reserve Chairman in a very difficult situation where if he resigns now, what kind of signal does that send to the markets? So really, this is getting uglier, not just between the US and China, but certainly signs of frustration now starting to show within the US administration and its different branches.
That's right, and Trump's extraordinary attack on Powell has happened while he's leading a meeting of the world's central bankers and economists in Jackson Hole, Wyoming. What did Powell have to say at that gathering?
I think Powell's repeated his support for the markets. He's been very not very committed on whether there will be rate cuts or not. But of course, The language that central bankers use, we've always seen is so important. And Jerome Powell really seems to be still sticking to that role. We saw that there are differences among the different members of the Federal Reserve Board about whether or not to cut the rate the last time. It's likely that the same will be the scenario going forward. But so far, I think that the language coming out of the White House really is the problem. It's not the Federal Reserve.
Now, in another response to the tariffs, President Trump says that US companies should look for alternatives to their Chinese suppliers and that the US is better off without China.
It's fascinating,
Is that
really,
realistic?
Oscar.
Yeah.
I mean, look, again, when was the last time that you ever heard a US president telling US companies that they should not be doing business somewhere, anything that isn't enshrined in the Constitution itself? Really, this, I think, is A, an overreaction, and B, it's not practical. There are many other ways in which the US and the Chinese economy are linked. There's currencies, there's debt. So really, this seems to be now snowballing once again. Over the past few weeks and months, we thought that the trade war was winding down. Unfortunately, it looks like Beijing and Washington are getting ready for another round of escalations now.
Well, Mobin Nasir, thank you for unpacking all of that for us.